Hello, welcome to the European Open briefing for Wednesday, June the 6th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. We are seeing a somewhat mixed US dollar this morning, although we did have more strong data out of the US yesterday. A slide in US Treasury yields is weighing on the greenback. The euro, on the other hand, is sharply higher this morning, as yesterday we heard the Italian Prime Minister ruling out an exit from the eurozone, and we're getting hints from the ECB that it will announce an end to its QE program at its policy meeting next week. In other major moves this morning, the Australian dollar jumped sharply higher following strong GDP numbers out of Australia, but the loonie and the peso suffered big losses yesterday. They are steady this morning, but we do have worries that the US may abandon NAFTA. But let's get started first with the US currency. We can see a dollar yen resuming its uptrend. It had found resistance at the 110 level yesterday, but has managed to break above that key level this morning, currently trading at 110.08. The dollar index, though, we can see appears to be drifting lower as a recovery in the euro is weighing on the dollar index. So yesterday we saw US Treasury yields fall sharply, mainly on safe haven demand, as we saw a spike in Italian government bond yields as investors were worried about Italy's plans to increase spending and cut taxes. But US Treasury yields have recovered a little bit this morning, helping the dollar yen head back upwards again. Yesterday we had the ISM non-manufacturing PMI for May beating expectations. Earlier in the week we had seen the non-manufacturing the manufacturing PMI also beat expectations. So the investors are now more upbeat about the US economy, and that is also helping equities, particularly tech stocks. Yesterday the Nasdaq Composite closed at a record high for a second straight day. If we now turn to European currencies, we can see big jump in the euro. We just had the chief economist of the ECB, Peter Praet, speaking earlier this morning. He sounded confident about the underlying strength of the eurozone economy and that inflation will rise to the ECB's target. He also hinted that at next week's policy meeting, the ECB will discuss whether or not to end its massive stimulus program. So we could have an announcement on that next week, and that was also confirmed by a Bloomberg report citing ECB sources saying that we will get an announcement to the QE end date at the June meeting next week. The euro, though, had fallen briefly yesterday after the Italian government announced plans to cut taxes and increase spending, so that sent Italian bond yields sharply higher. Italy is already heavily indebted, so any increases in government borrowing would make the matters worse. But there was some relief after the Italian government did say that he reassured investors that leaving the euro was never up for discussion. But the main driver this morning is expectations that the ECB will soon announce an end to its QE program. We can see the euro surging to a two-week high 1.1767 against the US dollar. The pound is also doing well this morning. It's broken up above the 1.34 level. It's mainly gaining on the back of yesterday's stronger than expected services PMI for the months of May, and in recent days, we had seen an equally strong manufacturing PMI and a construction PMI as well. So all of that boosts expectations of a Bank of England rate hike, although we're likely to see Brexit concerns capping any further gains in the coming weeks, depending on, of course, which way the Brexit negotiations go. We've got a number of key events coming up related to Brexit, so we would likely going to see more Brexit headlines, at least until the end of June, ahead of that EU summit. Let's now have a look at the Australian and New Zealand dollars. We can see the Aussie touched a fresh 6-week high of 0.7672 to earlier today. That came after data showing the Australian economy grew by a bigger than expected 1% in the first quarter. Forecast for 0.9%. On a 12-month basis, the Australian economy was up by 3.1%. That's the fastest growth in nearly 2 years. And we can see the Aussie moving back above its exponential moving average since early Asian trading. And the same is true for the New Zealand dollar. It's now trading above the 0.70 level, hitting a 5-week high of 0.7059 earlier today. And that's mainly on the back of positive risk sentiment. Yesterday, we did see a drop in dairy prices at the latest dairy auction, but there wasn't much reaction to that data by the Kiwi. And finally, let's talk about NAFTA, because yesterday we saw reports that the US wants to hold separate talks with Canada and Mexico regarding the NAFTA renegotiation. That's raised some speculation that the US is seeking to abandon the NAFTA deal and wants to negotiate separate bilateral deals. So those reports saw the loonie plunging to a 2.5 months low of 1.3067 per US dollar. The peso also fell sharply, hitting a 50-month low of 20.47 pesos per dollar. The loonie has recovered this morning, though, as there was a separate report saying that the US Treasury Secretary Steven Mnuchin had actually urged President Trump to exempt Canada from the steel tariffs. So that's boosted expectations that the US may that's raised the chances of the US deciding to once again have that exemption for Canada. We can see the loonie currently trading at around 1.2950 to the US currency. If we look at oil prices, so a recovery in oil prices may have also helped the loonie. Yesterday we saw WTI plunging to 2-month low of $64.22 a barrel. Brent crude fell to 1-month low 73.81. This morning WTI has rebounded to around 65.70. So yesterday we saw that in the news the US has officially asked OPEC to raise output by 1 million barrels per day. So that adds to the expectations that at the June meeting of OPEC and non-OPEC producers, we could see an easing of the output restrictions. But the rebound, though, came after the US inventory numbers from API showed a bigger than expected drawdown in US crude stocks last week. And we're also seeing reports that Venezuela is considering cuts to exports as it's having problems with production. And finally, looking at today's economic calendar, we can see it's going to be fairly quiet apart from trade numbers out of the US and Canada, as well as the IV PMI for Canada as well. That's it from me. Thank you very much for watching and have a great day.